what's up everyone? This is going to be the first video of a new series called Trading with the Banks. And in this video, I'm going to be discussing one of, if not the most important aspects of trading, which is identifying the trend. So I'm going to be showing you how to set up your EMAs to identify the trend, and then how to identify EMA direction, and lastly, how to tell if they have crossed or if the dominant EMA is still leading. So let's start with the first step, which is setting up the EMAs. Right here in this chart, we have the Great British Pound against the US dollar on the daily chart. We're going to set up the indicators, which are the EMAs. We're going to do 3 of them. Over here on the top left corner is where you put the settings on them. The first one is going to be a 50 EMA. I like to set up the style to my liking. You can do whatever color you want, whatever thickness of the line you want, but as long as it's the 50 EMA, you should be fine. Second one is going to be the 100 EMA. Again, do the style as you please, does not matter. And third one is going to be the dominant EMA, which is the 200. This one I like for it to stand out, so I like to do a black with an extra thick line. There you have it. You have the 50, 100, and the 200. The 50 EMA is the blue, 100 is the green, 200 is the black. If you guys don't know what EMAs do, they pretty much just tell you what the average movement of price has been over a past period of time. So these things move every time these candles form, and these candles form on a daily basis. So it takes 24 hours to form one of these candles, and you should know that if you studied the baby pips video that I put out. So the first thing we're gonna do is set up the EMAs. Boom, they're set up. Second part of identifying the trend is identifying which direction the EMA is moving. So as you can see, all of these lines, the blue, the green, and the black, are pointing in a downward slope. That automatically tells you that these EMAs are in a downward direction, which means that this pair, the Great British Pound and the US dollar, is in a downward trend, which means that we as traders have to look for opportunities to trade it downward. That's called shorting. And again, you should know that if you study the baby pips video that I put out. So since we identified that the trend is going down, we're going to look for shorting opportunities. And obviously I'm going to teach you how to do that in upcoming videos. Right now we're just identifying the trend. So now that we've identified that this pair is moving in a downward slope, we have to see whether these EMAs are still pushing downward or if they're going to start to change direction. So as I mentioned earlier, the 200 EMA, this black one, is the dominant one, which means that as long as this one is above these two lines, the blue and the green, it's still going to be in a downtrend, right? But the moment that this blue and the green cross above the black line, now we're looking at a uptrend. As of now, this blue one crossed the green one, and that's fine. We're still in a downtrend. As long as both of these don't cross the black one, we're fine. We're still going to be in a downtrend. There's no change in the direction of the trend as of now. So it's very simple. Step 1, you put the EMAs on your chart. You only have to do this once. You don't have to do this every time you open your charts. You do this once and you leave it forever. Second is you go from left to right. Start on the left side of the chart and go right. If it looks like these candles are falling in price, that means that it's in the downtrend. It's that simple. You don't have to complicate it much more. So if we look at another pair, by the way, when you set up these EMAs, the 50, 100, and 200, it applies to all the charts. So you don't have to put it in every pair that you want. So if we look at the Australian dollar versus the US dollar, You can tell that these EMAs are there already, and the same goes for this pair. These EMAs are pointing in a downward slope, which means that the overall trend for this pair is down. So we have to look for opportunities to trade downward. We look for shorting opportunities to go at least somewhere here. I'll tell you how to do entries and exits, where to take your money, where to put your stop losses, and where to enter in future videos. But as of now, we're just looking from left to right, and we can see that price is falling. It comes up, falls lower, it comes up, falls lower. It came up, so it's expected to fall lower in the future. Let's look at another pair, the Euro Japanese Yen. So this one, if you go from left to right, you can see that price is rising. We started here and ended up here. We started, if we look at this price point, at the 128.99, which is pretty much 129, and now we're all the way at the 140. So obviously from 129 to 140, it's increasing in value. So this one's in upward direction, and you can tell that because the blue and the green are above the black line, which is the dominant one. So that means that this pair is in an upward trend. One more, let's look at the Euro USD. Blue and green, 50 and 100, are below the black line, which means this thing is in a downward slope, downtrend. So we look for shorting opportunities. It's going down, so we follow it. Let's look at one last one, USD CAD. You go from left to right, you can see that these candles, blue and white candles, are pushing upward in value. So it's pretty evident that this pair is in an upward trend. This is one of the most important things you need to get down in trading if you want to be successful, and it's honestly not that difficult. You set up your EMAs, you go from left to right, see which direction these EMAs are pointing in, and you trade in that direction. You don't trade against it, because trading against it means you're trading against the banks, and you want to be trading with the banks. The moment you start wanting to trade against the banks, you're going to lose your money. I have 6 years of experience doing this, and I did that for a very long time, and I lost money every single time. There was times where I would win money, but it was very little, and it wouldn't happen as often. So it's very, very important. If you're a beginner trader, if you're an experienced trader, and you haven't had any luck trading, it's important that you trade with the trend, because that's the direction that these banks are trading in. You want to follow these big stacks of money that the banks are placing on these trades. You have to know that the Forex market is made up of more than $5 trillion. So just imagine that. Whatever couple $1,000s you're placing in bets are not going to make a dent in the market. Not a single dent. That's like a firefly trying to go up against a steel wall. You're not going to do anything ever. So your best bet when trading is to trade in the direction that the banks are trading in. And the way you determine that is by following these EMAs. It's that simple. Look at this. These things are pointing upward. So is price. Yes, I understand that at some point it falls like here, but those are drastic times. Doesn't matter. You don't give in. You stay the course, and you eventually start pushing up and pushing up and pushing up. That's all for today. I hope you guys learned something, and I hope you understand that trading in the direction that the banks are trading in is the most important thing when it comes to trading.
So goodbye for us. You have to say it, baby.